Magnus Heystek, traveling again, and it's good to see you in such fine fettle today, including a tweet that you sent out this morning. Well, I wasn't aware that the local financial institutions can be so badly kicked in the butt by a financial journalist who runs a similar portfolio to theirs. But just tell us a little bit of a background on that one. I'm sure that maybe giving you some background. We decided 7 years ago to start a portfolio, a model portfolio on BizNews, updated it every month, or at least went back every month, did a webinar on it, and that portfolio has grown from being worth 2.25 million to about 12.5 million rand now, primarily because it was invested offshore. And you did a tweet this morning having a look at what the comparative returns were from the big names in South African money management, and they don't compare well.
Not at all, Alec. I mean, it was astonishing how well your portfolio has done, and it just shows you how, if you're not aware and you're not made aware of the facts about what's going on in global markets, how easy it is to be complacent and be happy with returns of 4 or 5%, because the real facts you're being kept away from the real facts. And I've been trying for a long time to alert people that there's something fantastic going on overseas, and I got a hell of a lot of pushback, and I've been slammed by journalists and commentators, and we're not going to go into that. It doesn't matter anymore. Now, here you come with real money. It's not fictitious money. You created this portfolio for all and sundry to see. And when you tweeted this morning about your portfolio, I quickly had a look at our two biggest names, similar funds, equity funds. And the difference is not marginal. The difference is life-changing. We're talking 7 years. We're not talking about a humongous amount of money for most people, 2.2 million rand. But 7 years later, you've got 12.5 million rand in your portfolio, and you've got 2.4 million or 2.8 in the other one. That is just such a large difference. And it's very hard for the large institutions, to try and conceal this message anymore. And that was the power of your tweet, your article, and then I tweeted and it went viral, 300-400 likes, and people are saying, well, that is the reality. And unfortunately, that's the truth. And it ties to Regulation 28 that I wrote about last week. We had this article, and again, I had people slamming me, talking rubbish, and they're happy with their 3 or 4% returns per. And I'm saying, what about the poor investors who do not know how badly they are being shafted by Regulation 28? And as it so happened, I had a investment session with Brentist in the Cape with some high-powered investment players. I'm not going to mention names. You've got the Chatham House rules. I'm not going to mention names. They agree. They would desperately like Treasury to increase the offshore allowance, and they are speaking to Treasury, but Treasury is under tremendous political pressure not to increase that allowance for a variety of reasons. One is that it will be an admission that under the ANC rule, our markets are not doing well, and then secondly, they're also trying to protect the local markets. But there's no question that they would like that offshore allowance to increase fairly dramatically, because it is showing up in their returns.
That's an interesting point, because we were under the impression that this was a bit of a cabal between the big money managers, asset managers in South Africa and Treasury. And actually, it suited South African asset managers to be able to keep the money, 70% of retirement savings, in South Africa. But what they're saying to you is actually they aren't really wanting that to happen. They would love the opportunity to take that money offshore and presumably also compete with international money managers at the same time.
They would like to grow their book or their business faster than it's currently growing. We see it in the numbers of Coronation that came out last week, and you can do it in all the big names, Ford, Allan Gray. Their numbers are not growing, and this is a growth industry. Your assets under management determines your profitability. And I think that the asset managers are realizing, yes, it's nice to be in a protected environment, but if it's only growing at 5% and outside in the rest of the world is growing at 15%, if you do the numbers, you'd rather be part of that 15%, because that means a much bigger impact on your bottom line 5 or 10 years down the line, as opposed to a market that is struggling to beat inflation back home. So they're seeing the danger signs. And the second part of the almost admission from this gentleman was they're losing discretionary money because of the exchange control on discretionary money. They're up against the Reg 28 rules. So well-off people are taking money offshore in greater numbers, but a lot of that money is being placed with other investment companies, the Vanguards, the BlackRocks, the Templetons, the Fidelities. And our asset managers are very aware of this, that they're actually losing out on the party because they cannot compete in terms of pricing and range of funds that the big players in the world can do. So they're caught between a rock and a hard place. Yes, they'd like to keep assets under control, but the money is flowing out in other ways, and that's hurting their business.
So as the message comes through, as Magnus Heystek says more and more, look at the comparison between international to South Africa. Get part of the 99.5% of the world that doesn't exist in this country. Even those who have vested interests are realizing that they can't, it's like the little boy in the dike. They can't keep the finger in the dike forever.
No, they can't. And to bring it down to practical terms, I had a discussion with my wife, my lovely, dearest wife that I love immensely. And about 7 years ago, I said to her, she had a couple of, lock up and go rental properties, which if she had sold them 7 years ago, she would have probably got out of the deal 2 million rand. And I said to her, my darling, if you put your money with Alec Hogg and his portfolio, your 2 million rand would be close to 12 million rand. And, what is your property worth today? Not much more than it was 7 years ago. So in that case, and you can extrapolate this across hundreds of thousands of people, their property values have not gone up in 7 years. In fact, they've not gone up in 10 years. So the relative wealth is the issue here. A person who had taken money offshore has become increasingly wealthier than the person who has not taken money offshore. And your real life example just proved that point once again. And it's not a marginal difference. It is a humongous, substantial difference in real wealth. That case of my wife, she can buy a fantastic house in De Zaltse, pay cash for it. And she's got 2 tiny little apartments in Johannesburg. I mean, that's the difference in a relatively short space of time.
It's lovely, this whole idea of compounding, and certainly if you make the wrong call, or if you're going in the wrong direction, and you look back on it after a few years, it becomes enormous. But you've been arguing this for a long time. Your team, though, put a terrific piece onto BizNews this week about the 4 danger signs for South African investors. Do you want to just unpack that as the Brento strategist, as well as being the founder of the company, on what the thrust of that message is?
Alec, I must apologize. I saw that article. I haven't read it yet, so I cannot tell you.
Okay, so now I'm going to test you. All right. So what would you say the biggest danger sign outside of you need to diversify your investments offshore? What would that be? Would it be something like costs? Would that be...
No. Off the top of my head, what I've been telling our advisors, and we've just been at a 2-day conference with all of our advisors, is the macroeconomic situation in South Africa does not look good. And you have to factor that in to any investment decision that you make. And if you look at the numbers that came out today, about 300 billion rand has left the stock exchange and the bond markets year to date. Now, the question is, why? Why are foreigners pulling their money out of our market at such an enormous rate? Because we grew up in an environment, Alec, where they would always tell you the stock market is forward-looking. Now, that's the worry that I have about this massive outflow of capital by the foreigners. They are seeing things that the local market is not seeing, or would rather not speak about. And they are seeing a business community or a business sector under tremendous pressure as a result of corruption, state capture, and also a host of interventionist laws promulgated by the ANC government, which is having a massive impact on the bottom line. And whenever people write these reports about now they're optimistic about South Africa and now we've reached the bottom, I'm saying they are ignoring the big macro picture. So that's our one story. The second threat must be our deficits, our rising deficits, our debts are spiraling out of control. A year ago, South Africa's national debt was 3 trillion rand. Today, it's 4 trillion rand. Each and every South African owes about 80,000 rand in debt to the world. So that's our second portion. At some point, the bond investors are going to get nervous about this creeping debt level and start pulling the money out of the country, and that will spill over into the fourth danger, which is the currency. And we've had a fairly benign 5 years of the currency, believe it or not. It's been volatile, but it's been vacillating around the 15 level. So the rand hasn't really substantially weakened for 5 years, which is quite surprising. But if these things are not treated, the next crisis, in my view, and I've said so recently, is a sort of Argentina/Turkey currency crisis, where at some point the foreign investors, the bondholders, give up hope and they start bailing. And then the rand will go to 20, 25, 30. Now, I know a lot of people will laugh at this and saying that's, it's not going to happen, but I'm saying it could happen. The probability is rising. It could be 5% now. It's 10% next year. And before you know it, it creeps up on you. And we have an Argentinian-style debt crisis. Professor Michael Sachs, who used to be at Treasury, wrote a piece last week in Business Day where he alluded to this. He warned about the creeping fiscal/debt crisis. Claire Bissiker from the Financial Mail, identical article. And that's the next big crisis, is potentially a currency crisis. And we're warning our clients and investors to start positioning themselves for. And you need someone to watch it for you. It's not a forecast. It's a scenario that we do, scenario planning, which depends on facts and happening in the interval period, which could or could not play out. So the currency crisis is the next issue that we probably will have to deal with. And if it happens very quickly.
Big waving red flags. Magnus, an area, though, that is certainly captured the attention of our team at BizNews in the news conference this morning is that Magnus Heystek has bought Bitcoin. Take us through that.
This Bitcoin thing, as you well know, this has been swirling around, and every now and then someone asks me, when are you going to buy Bitcoin, Magnus? And I said, I don't know enough about Bitcoin. First of all, people ask me my views about Bitcoin, and I said, I don't know. But part of our exercise of our advisors is let's educate ourselves about Bitcoin. And we had a speaker by the name of Dwayne van Vuren, who's an expert on Bitcoin. And he gave us a very long lecture, and he tried to explain it to us best he can. And, and the reason is not that we want to become involved in Bitcoin. It's almost as part of, you need to have knowledge of the parts of the investment world so that you can guide your clients and say, look, we've investigated Bitcoin and we don't think you should invest, or you can invest maybe 5% of your portfolio. So it's part of a learning curve. And all in the room we bought, and some smart guy worked it out. Well, we only basically put in 200 Rand into Bitcoin. So yes, I have bought Bitcoin, but it's only worth 200 Rand.
Okay, so it's not a change in approach. You're not saying add it to your portfolio.
Alec, now I have a reason to track it. I have a skin in the game, as they say. And if I see my 200 start growing to 250 to 300, I might increase my exposure. I might now that I have a wallet and I can put money in, I might do that. But it's part of a learning curve. It's just up to now, I said, I don't know enough about Bitcoin to give you advice. And secondly, based on regulation, I'm not allowed to do so. But now I can say, look, I am trying to investigate and I will give you an answer. So, yes, it's a very small toe that I've dipped into the cold water, but I might put in more over time.
Now, you say 200 Rand. That's just 200 Rand, not 200 grand. It's
200 rand.
It's that little that little orange, the orange leopard. You put one leopard into the
You can buy it with 200 Rand, and now we're in the game. And, it was just a token for all the guys at the conference. And then, we might increase it. But now I start reading up a bit more in detail, watching it. And it's part of a learning curve. I mean, we sometimes investigate investments for our clients, and we actually come back and say, don't touch it. We have to investigate. But I'm not saying don't touch it. I'm saying you might start considering it because people might be going to do it in any case. It doesn't matter what we say.
It's an interesting point or philosophy that when you've got skin in the game, you do pay more attention.
Absolutely. You learn the dynamics. And I think the numbers in Bitcoin are becoming so large and big players are into the market. And Dwayne said probably the best way to play it is to buy the futures ETF, which is you can now buy on regulated platforms. Swiss Quote, which is very active in South Africa, offers you an opportunity to buy ETFs on their platform. So that's the avenue that we will now start investigating. You can buy it as part of a portfolio, tradable, price daily, but the answer is how much, and we will just have to wait and see.